Thank you so much, Sally. Thank you, ladies and gentlemen, for being here. Thank you, speakers. I'm not going to take a lot of time to get into introduction, so I'm going to get straight into conversation. I'm going to ask you a few questions, and then please do introduce yourself, what you guys do, and I think we'll just go in the order that we're sitting. So, Emon, starting off with you, tell us a little bit more. So, for anyone who does not know Emon, which is very difficult, Emon runs one of the most aspiring accelerators in Saudi Arabia, which is called Blossom Accelerators. Tell us a little bit more about Blossom. Tell us about yourself. And also tell us, how does Blossom help startups who are either aspiring to get into Saudi Arabia or are already existing in Saudi Arabia to expand and navigate that challenging market?
Thank you so much, Daniyal, and thank you so much to Forbes and Forbes 30 Under 30 for having us today. How's everyone feeling? It's a hot day. We're going to get cooled down in this session. It's truly a pleasure. It's actually my very first time in Abu Dhabi. I flew in last night from Riyadh. Just by way of introduction, my name is Emon Shakoor. I'm a neuroscience researcher turned entrepreneur and venture capitalist. And 8.5 years ago, when I was 23, I started a company called Blossom Accelerator. And today, we're known as a global accelerator and ecosystem builder. Over the last 8.5 years, we've accelerated startups across 9 countries, delivered over 150 programs, and have accelerated over 3,000 founders. And what we do is we really work with Saudi's top ministries, Saudi's top authorities, a number of the PIF companies and corporates to run different innovation and entrepreneurship programs to really help startups really start, scale, and succeed. Within regards to helping international companies come to Saudi, we're recognized as one of 5 companies in Saudi that has an official license from Saudi's Ministry of Investment to actually help international companies soft land into the region. And so what we do as part of that, it's really a 2-part process. Part 1, as part of our ongoing partnership with Saudi's Ministry of Investment and His Excellency, the Minister of Investment, Khalid Al-Faleh, we identify high potential companies, ideally tech companies that are highly scalable, that can really add to the economic empowerment of Saudi Arabia. We do some DD on them, some due diligence on them, and then we write a letter of recommendation to Saudi's Ministry of Investment. That's usually a quick process that can take as short as 5 days. And then we help that entrepreneur. So there's like an application on Saudi's Ministry of Investment's portal. With our letter of recommendation, they must have a letter of recommendation from an eligible entity like Blossom. And so then they actually submit that they should be eligible for an entrepreneurship license. The entrepreneurship license is incredibly affordable. It lasts 5 years. And then you transition to a different kind of license. But for the entrepreneurship license, actually on average, you only pay about $500 per year to the Ministry of Investment to operate. And then phase 2, which takes about 60 days, is the actual incorporation of the company registration, of working with that startup and appointing a general manager for their entire setup, making sure that company has an iqama, and then helping them with other aspects of market access via that be with our own network at Blossom, and also the wealth of other programs that we run within region. So that's just a bit, and again, very honored and very excited to be here and be part of the ever-growing economic empowerment the youth are driving today.
No, that's great, and I can second that. I recently, about 6-7 months ago, I registered my own startup in Saudi Arabia. It's not easy. It's a very lucrative market for anyone who's trying to expand. It's a market with over 30 million in population. The government is supportive, everyone is supportive, but just setting up the business itself can be a costly affair and can cost you time as well, which is very important in a startup, right? So if you guys are exploring Saudi, anyone, you should definitely reach out to
G20 economy, fastest growing economy on earth, population of 36 million people, 70% of us under the age of 35, the biggest buying power in the Middle East, over 50 funds in Saudi alone. Last year, we ranked the most active venture capital ecosystem in the Middle East, currently deploying at a rate faster than any other country in the MENA region. Come to Saudi, come to Riyadh. I don't know how else to say it. No one pays, it's genuine. No, because it's genuine. No, it's genuine. I started my company, when I was 23, I started my company as a solo female founder. And the amount of success and support would not be possible if any of the things I said today were not true.
Absolutely. Moving on to Islam. So Islam, ladies and gentlemen, if you do not know about Paymob, then you probably are not in the UAE or the Middle East, because Islam is the co-founder and CEO of Paymob, which is one of the largest digital platforms, fintechs. I'll let you explain more so that I don't butcher your introduction. But do tell us about yourself, tell us about Paymob, and tell us a little bit more about how digital platforms are enabling SMEs, which is one of your core businesses here in the region.
So first of all, thank you. It's great to be here. My name is Islam Shawi. I'm one of the co-founders and the CEO of Paymob. So at Paymob, we help businesses with tools to accept digital transactions and give them better access to financial services. So actually, we started in the payments business by complete mistake. We're actually building an e-com business, and we could not launch this because we couldn't find a payment solution that actually fits for our business model. So we realized that if we're bullish about e-commerce and digital commerce, then we should be bullish about digital payments, because it sits at the heart of any digital transformation journey. So we pivoted from Social Tab, which is the startup that we never launched, to Paymob. So this was almost 8 years ago. Fast forward, we now have offices in Egypt, Oman, UAE, Saudi, and Pakistan. We employ over 1,400 people. We last year, we've managed to process 0.5% of the Egyptian GDP into our platform. We're scaling in the UAE. We're licensed in UAE, Saudi, Oman, and Pakistan. To your point, we always advise startups and SMEs to have digital payment solutions, because it grows the size of your ticket, the basket size, and actually helps you attract different segments. So if you only accept cash, then the sales will only be function in how much money the buyer has on him or her at this point in time. But if you use credit cards, buy now, pay later, all of this, it helps you step by step sell more. And the more payment methods, which we offer 40 different modes of payment in the region. So the more payment methods you have, hopefully the more the probability of a sale would be.
Interesting. Sonia, moving on to you. Sonia is a general partner and co-founder at VentureSouq, which is one of the most active fintech investment firms. And now Sonia is setting up their climate practice. So Sonia, tell us a little bit about VentureSouq. Tell us more about this climate tech fund that you're overlooking. And also, I think what is important is for founders like myself to really know, how do I become investable? What is it that you guys look at when you're planning couple of $1 million to invest in a startup?
All right. Hi, everyone. So VentureSouq's been around since 2013, which is a long time for this ecosystem. We're actually generalists initially, so we invested across sectors, across geographies. We sit on a portfolio of about 250 companies that we've invested into over the last 11 years now. Quite a few from, I was just talking about Y Combinator, quite a few from YC actually as well. In 2019, we pivoted and decided to become a thematic VC, which made sense because we'd made so many investments across sectors and geographies. It helped us pinpoint some of the pain points and some of the sectors that we felt were still underserved from a capital injection standpoint from this region. And so we decided to double click, as the next generation says, on some specific sectors, one of them being fintech. So we launched the first sector-focused fund for the region back in 2020, which focused on fintech. We had previously made about 85 investments globally in the fintech space, so it made sense for that to be the first theme for us to choose to tackle. That fund was backed by all the sovereigns from the region, so PIF in Saudi, and SVC in Mubadala, and ADQ in Abu Dhabi, Al-Waha in Bahrain, and a bunch of the family offices. And then in parallel, we also actually launched an impact vehicle. That was me kind of testing the model out, seeing, okay, do people understand that you can invest in mission-driven founders who are actually building products across climate, financial inclusion, health tech, et cetera, really kind of aiming for those long-term, meaningful, positive outcomes, but also make a financial return at the same time. And now we're on successor vehicles, so we're on FinTech Fund 2, and then off the bat of the impact vehicle, which focused on climate and financial inclusion, we're launching the first climate-focused fund for the region, but specifically focused on MENA and Asia corridor. So a bit of a different approach. That's mainly driven by the fact that we've seen a lot of interesting deal flow coming out of Asia. If you look at the data from last year, and actually the data just came out yesterday for 2024, it's actually worse, but let's go with the 2023 data because it's a bit more hopeful. $5 billion was invested from the GCC into the climate sector across stages, so from early stage to later stage. A majority of that went to the West. Majority of that went to the US and to Europe. 58 million of that only stayed here in the MENA region to support climate entrepreneurs. And then little pockets went further east. And so that's kind of what drove our narrative to focus on how can you nurture the next generation of Saudi climate entrepreneur or Emirati climate entrepreneur or Asian entrepreneur, basically, and help them scale within that corridor, basically. So how do we bring the Asian entrepreneurs here to Saudi, the UAE, et cetera, and then conversely, how do we basically export some of the talent that we have here? Now, some will argue that, okay, makes sense, US, Europe, deal flow is abundant. Yes, abundant, but we've reviewed, I think, about 400 climate deals across the MENA region. So for those who don't think there are no deals in the climate space here, that's not true. There are deals. Now, quantity does not mean quality necessarily, but there are entrepreneurs that are trying to build really interesting products and platforms out of the MENA region. So how do we support those entrepreneurs?
And any key important factors that you look at?
Any what?
Any key factors that you would just wanted to...
Yes, the second part of the question.
The second part.
So yeah, I mean, I think everyone's heard kind of the usual, right?
ARR,
like when you invest...
MRR,
no, okay, so that specifically, yeah, sorry, that's what we talked about on the phone. So people often ask us, and I'm sure they ask Blossom the same thing, is there a specific metric that you look for? Like, is there a specific threshold? Our answer is no, because it depends on the company and it depends on the sector. So for climate alone, we focus on 6 subsectors, from food and ag to climate fintech, through energy management, et cetera. So we don't say like, hey, you have to make $1 million in recurring revenue in order for us to look at you. It really depends on the traction that you have, the number of pilots that you have. We focus for climate on Series A specifically, so where you're at in your fundraise journey as well. And ultimately, it's about the team. So even at Series A, it's just like if you're investing at the C level, which is what we used to do before, it is all about the team. You can have the best idea for the entrepreneurs, or you can have the best idea, and I'm sure you know this more than anyone, but it's all about execution in the end, right? So, I don't care if your idea is fantastic and unique. Are you the right team to actually execute on that idea? And if you look at the companies that we've backed that have not done so well in the past, it's not because the idea is bad or actually because the founder doesn't have the right pedigree to see it through. It's actually because it's not the right time for that founder to be focusing on that company. And so, again, for the founders in the audience, really encourage you to do some kind of introspection work, self-reflection work. Is this the right time for you to actually start a company, to build a company in your life? Sometimes it's not. Sometimes you need to delay it by a couple of years for whatever reason. But I think that level of self-awareness, both on the investor side, by the way, and the entrepreneur side, is actually really, really key, and we don't talk enough about it.
Interesting. I think we'll come back to this point in the follow-up. We'll move on to Aditya now. Aditya, tell us a little bit more about Burman Holdings, your role over there, and do also talk to us about something very different to what we're talking, which is the equity markets. Like, how do you guys hypothesize how to pick up stocks, or what is the entire thought process that goes beyond that?
Well, I'm sure I speak for everyone here. Thank you guys for having us. I'm Aditya. I head investments at the Burman family office. For those of you who don't know what a family office is, it's a private investment arm for extremely wealthy people. And this investment arm is tasked with essentially deploying their wealth for whether it's preservation or growth, could be multiple goals to it. The Burmans are from India originally, but they've been here for more than 20 years. They run one of the largest FMCG companies of India. It's publicly listed, and they're probably the top 30 largest family offices of India. So we operate across asset classes. Venture is one of them. We do a lot of distressed private equity buyouts, but we also manage a bunch of the wealth and liquid assets such as equities and fixed income. Coming to your question about equities, it's a very different space to venture. Venture is usually a smaller allocation. Equities tends to be a large allocation, and when you deal with such a large pot of money, it's extremely difficult to hyper-focus on picking stocks as you do it. But you do have a portion of capital towards alpha, which is trying to beat the market. And that's more about hypothesizing of a key trend that's going to come up in the future. Something like NVIDIA is what everyone talks about. The problem with that is that there's so many other bits and bobs of the value chain that create value that are unheard of. So you have to be a bit ahead of the curve, and once you are king of your domain and you make it it's a creature of habit, but once you're a king of your domain, you can effectively see where the industry is going forward. So the simplest example I can give you is with AI. For example, ChatGPT uses about 15 times the power that a Google search uses. So where are you going to find all this excess power? And if you just go down the train of thought, you can't use solar or something green just as yet because it's extremely inefficient. The lowest hanging fruit to fill that demand is either nuclear or maybe even gas. And if you invested in that, maybe just even a year ago or 6 months ago, you would have effectively seen triple-digit returns because the ecosystem of nuclear is so small. It's not hard to find an investment. So you got to be a bit ahead and a bit proactive. But you got to keep hypothesizing and playing them. You will get some right, you will get some wrong. Hopefully, you're more right than wrong.
Yeah, no, I think just adding on to that. So there is a YC startup that is now taking data centers into space.
Yeah.
So there's work already being done because I think people have realized that so much power. Where is it going to be generated from?
Absolutely.
So I don't know if it's going to be cheaper going up in space with data centers, but we'll find out. Emon, now coming back to you. Over 350 startups, like you mentioned, have been through...
3,000.
Oh, sorry, my bad. 3,000 startups. What are some of the most important suggestions that you would want to give to founders in terms of financial tips? Or because we had a panel yesterday, and then someone was mentioning, so we had a founder who was running a marketplace for buying and selling businesses. And he said that, we see a lot of the times founders and entrepreneurs don't have their financials right. They don't set it up properly. They don't track them up properly. So from your experience, what have you seen, with these 3,000 startups? What are some of the important tips and suggestions that you'd share that they should really focus on?
So I guess 3 different things. One, I'll highlight an impeccable company that we accelerated back in 2020 called Darahim. That's also a YC-backed company. And earlier this year in September, they were just acquired by one of the largest banks in Saudi, Bank al-Rajhi. And we also do a ton of innovation work at Blossom for Bank al-Rajhi. So the really great thing about Darahim as an app is it really ties into every bank within the region, and it kind of tracks all your expenditure. And I think, to be quite frank with you, when it comes to money and finance, I think sometimes it's unconscious, but a lot of people are not the best at it because there's some subliminal underlying fear or insecurity that's unresolved there to be able to really master it. And really your relationship with money, we talk so much about your relationship with yourself and here in the region about, getting married and finding love, but truly there's a really important relationship one has to have with their finances, whether that's on their individual level that they really need to master to be able to therefore master it for their company and for any other role that they have thereafter. So there are a ton of ways to really, track and a lot of books out there, but I really think it starts with the mindset. I did this exercise when I was 19 years old, and it really transformed my life. And at first I thought it was quite silly, but engaged me for just a few moments. Someone told me to write a letter to money. And that sounds kind of odd, but I was like, okay, I'll try. I'll write a letter to money. And at 19, my letter sounded something like, "Dear money, I want more of you. Sometimes when I need you, you're not around. But I swear if you were, we could do so much together. And, I'm kind of frustrated because, I really think that, it kind of gives me anxiety when you're not here." And then the person stopped me and said, "Do you think if you had replaced Dear Money with Dear Muhammad, Ibrahim, John, whatever it is, do you think that's a healthy relationship that you have?" And it dawned on me for the first time, like living 19 years, because I was very, very, persistent and persevering on really enhancing. I had this question top of my mind as 16, 17, 18, 19, and especially coming from Saudi. I always felt that Saudi women, at least for that time, we didn't have our own autonomy and power. I always felt that the power that we had as Saudi women was what I call secondhand power, power given by virtue of who you marry or who you're born into, but typically your husband and father. So from a very early age, financial independence and having full control over what that means for me was very important, was truly a part of freedom or liberation. And so anyway, so in writing this letter, I realized, oh, you know what? I think my relationship with money is so fantastic, but perhaps it's not. And then I really started to reframe the way I think about it, and just reading a lot of books and doing a lot of exercises and really being on top of it. And even the way I spend, whether I'm very particular about obviously not only company finances, but for me individually. And it's not necessarily there's a lot of people who say skip the cup of coffee in the morning. Obviously, the luxuries that you prioritize are all very personal, individualistic, back to you. But I think it's really thinking in a way of year to year, how much am I saving before, at least that's my mentality, before what I'm spending. And I think if you're able to master that for yourself personally, you can then later expand that for your company.
Got it. Guys, we've discussed a lot. We've run out of time, but I'm still going to go through our last questions. But quickly, I want to hear, so, digital transformation, e-commerce, digital payments have been on the high in the region. How have you managed the transition? Because it's, as typical businesses, it's difficult for SMEs to move over from cash on deliveries to digital payments. Just tell us quickly about how did that education happen and how did you transform that?
So definitely it took us a lot of time, and it took the regulator a lot of time. So first there's the government and the regulator push on making it as easy and seamless as possible. Obviously, trust played a huge factor, because again, when you do a cash transaction, cash settles instantly, right? However, if you pay with card, the merchant or the SME needs to have trust in us and the bank that their money is going to be settled like following day or T+2. So I think people step by step started trying it out, seeing what happens. And by time, when they saw this consumer push, they started feeling that there's no option. I mean, if I don't accept digital transactions, I'm gonna be out of the market. And actually, a lot of our merchants or SMEs, we go to them and tell them, how many transactions did you lose or sales did you lose because you didn't have like online gateway or a post in store? And they say like 3 transactions this week. People ask for it and they say they're gonna go to the ATM and they never came back. So when they feel that they're losing transactions and losing sales, this is what actually drive SMEs to adopt new things. Because at the end of the day, any SME or any business, they want to make more money, they want to sell more. So if you give them a tool that would enable them to attract more clients and sell more, they would be very excited to adopt.
Yeah, I think this trend has been consumer driven. Sonia, founders, the markets are getting really crowded. How do we stand out? Tell us a few tips.
Okay,
Quickly,
I'll be quick because I know we're running out of time. I guess for the founders in the room, do your due diligence, just like we diligence you guys. Don't come to me. You know now that I focus on climate. Don't come to me if you're building a fintech product. Don't come to me if you're focusing on ed tech or health tech. I am not that expert. So I think that level of diligence is really important. The number of LinkedIn, I don't know how many thousands of LinkedIn invitations I have in my, that's why I don't use LinkedIn. I have in my inbox. I think just if you are going to use LinkedIn, be super, super targeted. Explain why you're reaching out to that investor. You would have done the research, you would have seen the podcast, read their pieces, understood their thesis, etc. So that, it's not just, and please write the right name as well. I mean, the number of times we've received LinkedIn messages where it's clearly addressed to someone else it's just not nice, to be honest. Once you do get a response level, etiquette, just say thank you. It's just basic stuff, but it's like, even like that kind of is important. Like, even if I don't invest in your company or I don't, kind of take this further, maybe I'll introduce you to someone else who can be valuable to your journey, and just acknowledge and accept that and say thank you. So I think just these types of things are important. I know it's hard to stand out when you go to events. I know this was surprising to you, but come up to me after this if you are working on a climate product, so I can put a face to the name. That's better than you just randomly messaging me, or even worse, cold emailing me, and I don't know where you got my email from. It's not that easy to guess. So yeah, those are just a couple of tips. Like, if you're doing LinkedIn, be targeted. If you're approaching me after an event, be targeted, but say something that I can remember you by.
And warm intros work with you?
And warm intros, yeah. So warm intros work. Like, that is the best, by the way, for the founders in the room. Like, if you come referred by someone that I know, that I trust, that's a filter. That's already like one step ahead, I would say, of all the others. So warm intros for sure. You are fortunate that we are in an ecosystem where we have friendly investors, where we all know each other, and we all like each other for the most part. And so we also refer deals to each other. And so if you have a good relationship with one investor, ask him or her for an intro to someone else, or to me, etc. That also helps as well. So yeah.
Perfect. We'll take a note of that. Aditya, parting question with you. Some of the top mistakes and challenges that people face when looking into equity markets.
You can go on about this for hours, but I guess we're short on time, so I'll just leave it with a simple thought. I think most of the mistakes made are to do with psychology of investing, and just a simple thought to think on. Let's compare apples to apples, literally. Let's take Apple stock and an iPhone, right? You see an iPhone, let's say it's $100 for the best iPhone out there. If it goes to $80, you're like, it's a discount. That's fantastic. I'm going to pick it up. But when it comes to the stock, if the share, let's say it's at 100, it's not, but let's say it's at 100, rose from 100 to 80, something's wrong with the company. And that's not a discount. You're happy to take a depreciating asset at a discount, but not something that could appreciate for much cheaper. It's not as simple as that, though. But it's just a thought to sort of tune your mind to viewing things as an opportunity, as opposed to the world ending, which is what a lot of people do with companies. So yeah, I think that's one of the main mistakes. There are plenty more, but I'll leave it with that.
Well, I wish someone could teach me how to pick up crypto stocks. People are making a lot of money on that these days. I really hope. If you guys have any tips, do give it to me. But thank you so much. Big round of applause for all of our speakers today. Thank you so much for being here with us. And looking forward to hosting you again.